Now, the second part of today's show has to do with investment strategy. Why we're doing this is that we might be at very close to all-time highs for the benchmark Nifty 50 here in India, but there's a lot that's happening globally that could affect capital markets, not just here, but around the globe. So to make sense of that and to align your strategy, I'm joined today by George Heber Joseph, who is the CIO and CEO of Equity at ASK Investment Managers. George, thanks so much for taking the time. Let me first ask you.
Thank you for having me here.
My pleasure. Let me first ask you from your lens. You will obviously absorb a lot of information, but a few things will be placed at the top of your desk, at the top of your mind. What are those 2 or 3 events or items that you're paying most attention to right now?
A couple of things which is top on the radar. One, the tariff deal India is negotiating, how it is panning out and, what is the conclusion around that. Second, in terms of the earnings growth trajectory, which is building up, after the Q2 results. These are the 2 top of the agenda items in my mind.
What is the potential upside, in your opinion, or the benefit from a tariff deal? Is it more to do with a negative sentiment that has been associated with India from the global perspective on account of these tariffs being imposed, going away, so the attractiveness for a foreign institution goes up, and then one assumes that the Indian equity markets will rise as a result?
Well, so there are multiple contours to it. Number one, as you rightly mentioned, the FII flows have already started last month, and I think it will gain steam as we move forward, if at all there is more clarity and sentiment around the tariff deal with the US. Second part is in terms of the companies having more clarity in terms of doing the business with the US. Some of the export-oriented companies getting more clarity on their order book, and also the capacity expansion which they can do in line with that. So some of the capacity expansion, many companies would have been thinking through and looking at the scale of opportunity, probably would have been put on hold. Now that also come into stream. So it is very important from Indian context, according to me, from the capital expenditure which the private companies are supposed to put forth, and to give more clarity on that. Also, this deal will help. So lot of things which will go hand in hand, and again, the earnings outcome also will be visible from the deal coming through.
Yeah.
Because $90 billion exports, which is specifically to US, also is in the doldrums, and which has already come off to $60 billion, which also will bounce back.
Okay. So that's the first aspect, and point well made. But the second aspect, of course, is the earnings trajectory. And I'm wondering what you think about what you saw in the second quarter and heading into the third quarter. So, for example, there are a few companies that have already gone on record to say that the second quarter will be, or the second half will be better. But there are still pockets where you're assuming that there will be disruption. I mean, we spoke to Blue Star, for example, today, and they were saying that for the full year, they're anticipating that it could well be, in terms of volumes, in terms of revenue, a downtick of between -5% and 10%. And so therefore, there are pockets where you're not anticipating things will get much better. But at the same time, there are companies that are saying we're going to have a fantastic second half. How are you reading the signs?
You see, the last quarter results, especially from the capital goods companies, as well as real estate companies, the results have been far more better than expected, even though a lot of it is in the price and, it has been captured in the numbers. And even you look at the two-wheeler sales and the four-wheeler sales have been better, having the festive season also went well. And beyond that, we are seeing all these companies, some of the order book or some of the sales would have been postponed to Q3, mainly because of the GST clarity looked at. So what we are seeing is that in the Q3 and Q4 could be far better than Q1 and Q2. And a cyclical rebound is clearly visible. Alongside, when you look at the financial sector, financial services sector, banking and financial services sector, the credit growth is picking up, which is also a good sign. And if you look at some of the large banks' commentaries from the results, also suggesting that the corporate capex and corporate loans is picking up. You look at the commentaries on, the MFI, or you look at the sectors like SME segment. All of them are, the worst is behind.
Yeah.
Things are looking up.
Okay.
So net, most of these sectors are for a good rebound in Q3 and Q4, and which is what we are expecting from the results when we look at.
Okay, so it's a great time to double down, and I think it's been described as a year of accumulation, and I hope that my viewers have utilized that time wisely. George, thanks so much for taking the time today. Important perspective that you shared with us.
Thank you.
All right, now one last aspect to get through today.